Adani group of stocks got smoked on Wednesday, then on Friday. Now the puzzling part for the market is that if the stocks are down and if the Adani Enterprise stock price is currently below the FPO price, what gives the confidence to the management that they want to go ahead with this mega fundraise? Why should retail investors subscribe into it when the issue is down? What about the allegations which have come out from the Hindenburg Report? All that and much more needs some directional, some clarity. And let's take that forward with the group CFO Robbie Singh to understand that what really has led to this straight line fall in the stocks. Robbie, great to have you back on ET Now. Thank you for joining us. Robbie, the stocks of Adani Group, they've got smoked. It's been an excruciating fall. Billions of dollars of market cap has got eroded in just 2 trading sessions. What has led to this fall? Short selling, or this is more than short selling, it could be large institutional investors who've decided to sell the stock in last 2 days. So tell us the inside story. What has led to the stock fall?
I'll answer the second part first. Have we seen any exit of large shareholders? From the data that we have as of the weekend, the answer to that is no. A lot of our large institutional investors are long-term strategic intergenerational investors. So they see the wealth creation in a utility platform over a generational period. And there, because all of our entities, public companies, 9 we have now, they are primarily into the core infrastructure that is required in India. And so those entities are their business has not changed independent of the share price movement. So therefore, we don't expect it, and neither has there been any movement in the long-term strategic investors and their positions. On the first part of your question, yes, the short-term volatility happened and the share prices have consequently changed. But again, because the fundamental business has not altered in any way, we believe that this volatility will pass. In a week's time, our quarterly results will come out and people will see that the group continues on its upward trend. And therefore, we believe that over a period of time, it will be seen that we are a core infra utilities platform, and therefore on a weekly basis, our cash flows doesn't alter. So give you an example, a point here. Every week on average, our portfolio makes about 1100 crores. This Sunday also that number was achieved. Next Sunday it will be the same. The following Sunday it will be the same. So we believe that that it will become clear to investors, and this short-term volatility will be addressed as we go through over the next few months.
Robbie, now the Hindenburg Report has raised 88 concerns. I'll talk about some of the big concerns. The leverage. And the leverage concerns about Adani Group have been discussed in the past as well. So let's take that forward. In last 4 to 5 years, your debt has doubled, but over a similar time, the listed companies and the leverage ICR has improved. But what about the debt at promoter level? If you can just give more clarity on that where is the leverage situation?
Yeah, I think as correctly highlighted, as it is this report, I will come to that. Even this report couldn't find anything with the asset and performing of our businesses. So they talk about promoter level. Promoter level debt, we hardly borrow on a corporate basis. So at promoter level also, we don't borrow much. At a promoter level, we are net lenders to the market. So therefore, that on a corporate basis also, we don't have much debt. On promoter basis, we actually, as I explained, we are net lenders. So it's completely unsubstantiated speculation that we have huge amounts of debt at promoter level. We are one of the few groups that formally declare its total pledge position also on a regular basis, on a quarterly basis. It goes out as part of a credit report, which goes to all investors, all our banking partners, all shareholders, even independent directors. So the informed investor base is very clear that we don't have this. So this report, to that extent, is mere speculation on that point of debt, and on other aspects we'll discuss. But as we go through this this period, it has to be recognized, and I would like to clarify for the public that our large companies, say Adani Transmission or Adani Port or Adani Green or Adani Total Gas, their credit profile is similar to that of the government sovereign companies. We are the highest rated infrastructure portfolio in the country, with the exception of the Government of India. So I think this has to be seen in that context. We are very comfortable with this, and therefore we believe that it is completely unsubstantiated rumor mongering, although it affects us temporarily.
The report also talks about stock manipulation by Adani group of companies through offshore shell companies, and they've been specific there. How would you like to respond to that?
False.
Saying that the report, which is claiming that 5 FIs have invested in Adani group of companies, have got nothing to do with the promoter entity, because the report talks about the fact that these entities are controlled by Adani group.
No, it's nothing to do. Our promoter shareholding, both for India, and we hold some of our shares from overseas. In our Holcim transaction, when we issued the open offer document, the entire structure of our overseas holding is fully disclosed. Our domestic holding structure has been disclosed in many, many documents for the past 12 years, in public documents for investors. So therefore, to anything beyond that, that we have fully disclosed in our offering documents for investors, for regulators, for everybody, is mere speculation. And we cannot answer to speculation, because this holding structure from family trust, intermediate companies, and companies that hold shares, be it domestically, be it Dubai to Mauritius, etc., is fully disclosed in a comprehensive manner. And so therefore, to allege, to speculate that we control some company or don't control some company, I am not aware, nor do I have any reason to believe that that is the case.
The report also is raising a serious concern that your financial numbers are inflated. There are inter-party transactions. As a result, the financial numbers are bloated. How would you clarify on this? Because this is a serious charge.
I think they raise a specific question. They ask, and we have addressed this in our report, in our rebuttal to that report. Now, this is a specific question they asked. They said that in relation to Carmichael Rail, I'm aware of this because it's part of AEL. In relation to Carmichael Rail, that we transferred an asset to a private company, and then the private company immediately wrote down the value of the asset. So their implication is that we overinflated Adani Enterprise revenue by writing off the asset in a private company. And this is the malicious nature. That's what my media statement, because I knew this at that point in time also. This is the malicious nature of this report, which is borderline lying. It is certainly a misrepresentation. First, we actually disclose this ourselves, that this is a related party transaction. Then we disclosed fully how the transaction was done. Now, if somebody claims 2 years of research, they would have known that this asset, when it was transferred, it had its accounting treatment known in Adani Enterprise. So they could have seen from the same note that in Adani Enterprise, we had already written down the value of the assets and charged it to the P&L as a loss. They knew this, and yet they still publish this question knowing this. Now, I'm saying they know this because they claim they researched for 2 years. Now, if they did not know this, then it is just purely ignorant and malicious. If they've knowingly done this, it is a case of genuine falsehoods and misrepresentation. So this is a clear example which we have highlighted and we have made public in our response, which is well over 400 pages, fully annotated, and we have attached the documents so people can verify themselves that 68 out of 88 of these type of questions they have asked.
The stocks of Adani Group of companies have fallen. Are there any margin challenges? What are you getting? And if the stocks they fall down more, could there be a margin gap which could create a snowball effect if these stocks go down?
We borrow very little at the promoter level, and we declare it, and therefore the coverage that we have in relation to that borrowing, one, we have cash to actually not and pay the borrowings, full stop. So therefore it is completely baseless that there were margin calls. Before margin call, we'll just pay and borrow and completely retire the shareholder loans.
Okay, the FPO, the fact that the Adani Group has decided to go ahead with the FPO of Adani Enterprises, what gives you the confidence that the issue will sail through? And I just want to put things in context for our viewers here. The stock price of Adani Enterprises as on Friday was 11% lower than what the FPO price was. What gives you the confidence that you will get enough and more demand and this mega fundraising will sail through?
I think the FPO is, as you know, it's a three-part process, and we deliberately selected FPO because we wanted to make sure and achieve certain outcomes. One, broader institutional participation, broader analyst coverage, and actually broader HNI and retail participation. Now, in the current situation, or due to the volatility on Friday, the price is below the retail target price. So we expect that retail participation, we'll wait to see how it goes. But the long-term investors see the value of Adani Enterprise differently. So they are fully committed for the FPO. And we have no information that that has changed. So therefore, we are moving ahead because we believe that with our institutional and strategic investor base, that the offer will anyways be fully subscribed. Now, and that's why we clarified that FPO is proceeding as normal. And the reason the confidence comes is because the way long-term investors look at AEL value. AEL value is not in the share price of AEL. It's just a holding value. The real value of AEL is in its incubating assets. This is Adani Airports, Adani Data Center business, Adani New Industry Green Hydrogen business, Adani Roads, Adani Digital Labs, Adani Wilmar, and our mining services business. Those businesses are still performing as they are, and they have still the same value. Now that value will be exercised when we demerge this business in the next 4 to 6 years. So for long-term strategic investors, that's what they're aiming for. And that value has not changed because that's not the representative of the AEL. AEL share price is not representative of that value fully. It's a discounted value. But so long-term investors comfortable with the underlying value. Retail investors naturally will see some pullback, but even some ultra HNI and HNI will participate.
So Robbie, I just want to get this one right. The FPO is still open and markets will open on Monday. So irrespective of what could happen to the underlying stock price, you are going ahead with the FPO, you're not changing the price, and you are reasonably certain that the FPO will sail through.
No, we are very confident of it.
Okay, when the FPO document was initially shared in the public domain, Adani Group did indicate that one of the reasons why they want to go ahead with an FPO is that they want the retail participation in Adani Group of companies to increase. Now, why should retail investors really subscribe to the FPO? Because if the underlying price is much lower than the FPO price, then for a retail investor, frankly, the motivation to subscribe into the FPO will not be there. So don't you think that entire purpose of increasing the retail shareholder base will get defeated?
Correct. Our objective on the retail investor base is twofold. One, obviously, we want to spread out the share register, which is our objective, and we'll do that over the next. As I mentioned, that in the first phase of our strategic plan, we expect to complete that by 2025, 2026. Now, in the short term, naturally, there is some change will happen because of the possible pullback of retail investors. But it's very important for us to understand why we wanted to aim for the retail investor. See, we are being in infra and being asset-based company. It is very important that Indian public own its own assets. So in our case, see, it's very different. When you go to Mumbai airport, it would be good for the person going to Mumbai airport to own some shares because it's their asset. It's assets of India. Indian public must participate. And we want to encourage that participation. So it's a bit of disappointment that you will have some pullback. But in the longer term, we believe our objective to continue to encourage Indian retail investors will pay dividends, and the wealth creation that Indian investors, retail investors, mom and pop should enjoy from Indian assets will occur, and that is one of the key objectives of our founder and us. Therefore, that the public should participate in the wealth creation of hard, real assets in the country.
Okay, let's talk about Ambuja and ACC, your recent big acquisition. Adani Group used the leverage vehicle to acquire. It was a large acquisition, so the leverage route was used. On Friday, the stock price of Ambuja cracked below the acquisition price. So is there a leverage stroke of margin issue there?
Yeah, we don't have Gujarat Ambuja's shares were never pledged, and we had clarified at that time also. It was a representation based on the very technical definition that SEBI has. The shares are never pledged. There, the way the acquisition of that nature is accomplished, it is done in the nature that we tell to our bankers and debt capital providers that we will hold a minimum number of shares, not value of shares. So there we are not seller of our equity. So we said we will own 63% of what the precise number slips me, about 63% of Ambuja shares, which we own. So it's nothing to do with it's not a loan against shares. Not pledged in any way. It's a security package, which is different from pledge. But that is counted in encumbrance by SEBI, and that's why there was some misunderstanding and people misreported that as pledge.
Robbie, did you get any feelers from institutional investors that they want you to reprice the issue, or are they fully committed to subscribe to the FPO at the original price? Because institutional investors are also very, very price sensitive.
It's not for us to give a discount. I think important for us is that there's a value equation here, and the value equation is based on the sum of parts of real assets being developed, and we evaluated carefully the events last week, and the consensus feedback was that you please go ahead as planned, and that's what we are doing.
Now, what's happened to the stock price, Robbie? We can argue and say, look, it's happened in the secondary market, it's sentiment, it's technicals, it's compulsions in nature. But can I say that from a business standpoint, irrespective of what has happened to the stock price, Adani Group will go ahead with its CAPEX plans. There would be no alteration there. There are no debt obligations which could create challenges in the short term. And it is business as usual for Adani Group of companies, irrespective of the stock price plunge.
Absolutely. We are in a position where, like I said, last week we made EBITDA portfolio level 1100 crore. Next week it will be the same. Week after that it will be the same. We are non-discretionary consumer spending portfolio. So therefore, underlying businesses are as they are. super high credit quality, massive cash flows, and therefore underlying business, even their growth trajectory is not impacted by this, let alone anything else.
All right, Robbie, good luck.